Hi, Santa Barbara and Montecito. Daniel Zia here. I am the founder, CEO, and lead broker associate for Zia Group here with eXp Realty on the Central Coast. Now, if you weren't aware, we actually service all of Santa Barbara County and all of Ventura County. So if you have any friends, families, members, loved ones, coworkers who have any real estate needs in either of those two counties, please do let us know. We've got real estate experts in every one of those communities on almost the entire Central Coast of California. Now, I'm actually here right now to deliver the May 2025 South Santa Barbara County real estate market update and report. This goes over all of the data that we have through the end of April, and it's an interesting market right now. There's some interesting dichotomies. Before we dive into the stats, let's talk about what we're seeing kind of in the overall economy. We just had the big surprise change in tariffs. Those tariffs are drastically reduced for this temporary period of time, which is giving optimism, fueling our economy, giving more optimism into the economy, and that often has an inverse effect on real estate interest rates. So there's good, bad news. Good news is people are having a more positive outlook on the economy. Bad news is those interest rates aren't dropping down as quickly or decisively as we hoped this year. They're still hovering plus or minus 7%. As far as what we're seeing in our real estate market, we're kind of seeing a split in the market. If you look at the market statistics as a whole, you're going to see the median sales price up dramatically. You're going to see the average sales price up dramatically. And you're going to draw this conclusion that it's this banner real estate year and prices are going through the roof. That's really not the case. I mean, really, if you look at the market statistics says that the median sales price has gone up 26% year over year, which is astronomical growth. But if you take out the luxury market of Montecito and Hope Ranch, the median sales prices only increased 3% in that same period of time. So what you have here is you have the luxury market really has exploded this year, especially the first 3 months of the year with really strong luxury activity. My personal belief is that's a lot fueled by the fire events that we've talked about the last few months and that migration of luxury buyers up from the Palisades and some of those other locations in LA that were devastated by those fires. Now, that fire migration has tempered a little bit. There are still some of those buyers that are planning to buy that have not yet pulled the trigger. They haven't found the right property, but we do think that's been a major driver in the luxury market this year. Now, the affordable market, call that anything under $3.5 million, has been actually kind of like a steady and true market so far year to date. You've got what I feel is kind of pretty equal leverage dynamics between buyers and sellers. Really nice properties or properties that are positioned very well on price are still moving fairly quickly. But if you're off even a little bit in that original asking price, oftentimes the buyers in this market have been really unforgiving and sellers are having to do one or multiple price reductions to get them to come back on the table and often selling for much less than they could have originally if they just priced a little bit more aggressively from the get-go. It's just a kind of an unforgiving market from that standpoint. While we have seen some properties sell for more than they did a couple years ago, we also have multiple examples of the exact same property that was purchased a couple years ago in the last 1, 2, 3 years actually not selling for that same sales price or more, but actually selling for less or not selling at all, but with an asking price of less there. So even though the market says the market statistics say that prices should have gone up by 3%, excluding Montecito and Hope Ranch, the reality is in some cases your home may not be worth more, it may be worth a little bit less. It just depends a lot on who's marketing it, what the representation is, and how you're pricing it from the get-go. As far as the inventory, we track the months of inventory, also known as the absorption rate. We've actually had a lot of new listings come on the market, which is great. That's generated some more sales activity this year over last year, but not as much sales activity as many homes have come on the market, which means that absorption rate has been slightly increasing. It's just about 7 months of inventory on the luxury side and 3.25, 3.5 months on the more affordable side. As I mentioned, prices, if you do look at the market statistic, are at their all-time peak. They've actually surpassed the previous peak there in 2021, beginning of 2022. But that's really kind of split between your luxury market and your affordable market, so it's kind of skewed a little bit from that perspective. On average, homes are selling fairly quickly. When you look at the market as a whole, the average home's taken about a month to sell. And on the luxury side, we had 16 sales over $5 million last month in April, which is a tremendous amount of luxury sales activity. And one of the surprising things is the homes that sold only took an average of 2 months to sell, which is very, very quick for the luxury affordable side of the market. When you think about condos are actually having pretty much a banner year. I mean, they're selling fairly close to their asking price. They're selling very quickly. The number of sales is up 26%, but the median sales price is up 27%. And if you take out that luxury market of Hope Ranch and Montecito and some of those high-end, we've had some downtown luxury condo sales, for example. If you pull that out, it's still up, but just not as dramatically. It's up about 17%. Highest condo sale last month was a really cool, modern, contemporary, downtown, kind of loft condo, 3-story on Anacapa, really cool property. Felt a little bit high there in the mid to high fours, at least in my mind, but hey, the seller got it. Great job on the listing agent, did a great job on the marketing there, so that's a big sales price for downtown condos. On the luxury side, high sales was actually in Hope Ranch. Hope Ranch is having a great sales year compared to last year. You've got a beautiful Spanish Mediterranean estate that sold there for $12.5 million last month on Via Bendita. Beautiful property, no ocean views at that price, but just absolutely impeccable and just a stunning property. So luxury market, like I mentioned, is going strong, and we'd hope that continued. I have been masterminding with top real estate teams all over Southern California and Central California, and it's interesting, a lot of the market in some of these different areas, from La Jolla to Palm Springs to Beverly Hills, the market's a little bit sluggish, is the kind of their individual pulse on the market. So I don't have the statistics for all those different areas, but the kind of the verbal anecdotal evidence has been like, hey, it's definitely slowing down. And it could have been some of that, again, some of that luxury migration from the fires, going to a lot of those different locations outside of the Palisades, outside of Altadena and Pasadena, to some of these luxury areas. That's starting to slow down a little bit there. And I do think that with everything going on with the tariffs and some of the economic things, for some buyer segments, that's created a little bit more caution or uncertainty. But hopefully with some of that clearing up, there's a little more optimism, and we should see some more sales activity here in the next couple months. So as always, real estate is hyper local and it's hyper contextualized. So if you'd like a private, personal, confidential consultation, and please do reach out. We're happy to do that, whether you're thinking about buying a home or selling a home or investing in real estate. We're always happy to help. Until next time, have a great start to your summer.